Saudi Arabia has been fraught by challenges over the past few years. The government's been facing budget deficits since 2014 because of low oil prices, and its economic reforms have stalled. It's also facing international condemnation over the killing of journalist Jamal Khashoggi last year and the war in Yemen. But things may be looking better in 2019. Riyadh reported a budget surplus for the first 3 months of the year, marking the first time the government's income has exceeded its spending in 4 years. And it's poised to rake in a windfall from US sanctions on Iranian oil exports.
The customers and those who want to replace Iranian oils, they know which number to dial, and we're ready for them.
The energy minister's statement came at a financial conference in Riyadh, and this time many of the companies that had boycotted a similar event back in October were in attendance. And they're not just talking shop, the biggest banks are back to business as usual in the kingdom. In April, HSBC and Citigroup were part of a consortium that helped Saudi Aramco raise $12 billion through bond sales. Morgan Stanley and JP Morgan are advising the state-run oil company on its plan to buy chemicals giant SABIC. And they're jostling for a piece of what's expected to be the world's biggest share sale, Aramco's initial public offering scheduled for 2021. Officials say the listing may take place earlier than planned, and analysts point out that's quite likely if international oil prices keep rising.
They'd be even more happy if they could get those oil prices to elevated levels a little bit more than they are right now. They are probably looking for something around $80. We're pretty much at $75 in Brent right now, so they're pretty close.
Diversifying the economy has been a key priority for the kingdom, but many of its projects have been stalled for years because of a lack of funds. Now that oil revenues are rising again, Riyadh may also be able to finally get its Vision 2030 back on track. Mobin Nasir, TRT World.
For more on the story, let's bring in our editor-at-large, Craig Copetas in Paris. Hi, Craig. So the boss of the world's largest asset manager, BlackRock, Larry Fink, was full of praise for Saudi Arabia when he took to the stage in Riyadh. It was just 6 months after he boycotted the so-called Davos in the Desert Summit last year. It really didn't take long for the business world to forgive the kingdom over the killing of Jamal Khashoggi, did it?
Well, the devil's in the pronoun. Yes, he may have boycotted it, but BlackRock representatives were at that meeting, as were the representatives of all of the other major companies who did business in Saudi. It's just we didn't have any A-list corporate executives walking into the building to be filmed. The business world's outrage over the ghoulish, absolutely ghoulish assassination of Jamal Khashoggi in Turkey was a publicity stunt that was equally horrible. The relationship between Wall Street and Saudi Arabia was morally compromised the day oil was discovered. And since then, that relationship has been based on strategic interests, not shared values. That's where the money is, and that's where the money people have gone and where they're going to continue to go.
So why then are financiers right now scrambling to get into Saudi Arabia? Is it just about this highly anticipated IPO of Saudi Aramco?
Well, yes, among other things. You know, remember, the Saudis have dried and marbled Wall Street like a quality beefsteak, and everyone wants to get in on that action. The problem that we have here is that the financiers and a lot of global leaders don't mind. They don't care that Saudi's foreign policy is that of a silverback gorilla. And a lot of people do. So that's where the disconnect is. The issue that the Saudis have here, and it's an important one, is their IPO, 2021. I still don't believe that the Saudis can meet the compliance standards for Aramco to be listed on any exchange of any value. They're saying that this is designed to reorient the economy from oil to technology. And I don't think that's the case, because everyone who's going into Saudi Arabia, and I've talked to some of them, They're going in to get in on the money that comes out of oil, not on building Uber in the desert.
Interesting. And do you think Saudi Arabia will listen to what Donald Trump says and make up the shortfall for a loss in Iran's oil production?
Well, the question, yes, they will, but the question is at what price? New deals have to be cut. You know, this whole thing, you know, the Saudis pacify the West with oil, hopefully at a cheap price, much in the same way you pacify a child with an ice cream cone. The West can't get enough of Saudi's oil. And they keep buying Western material, $110 billion of U.S. weaponry most recently. And people keep coming in. Standard Life Aberdeen Asset Management just bought $100 million of Aramco bonds. On the same day, the UN Human Rights Chief condemned the mass execution of 37 people in Saudi Arabia, 3 of them sentenced as children.
Yes, and of course that just happened the day before this latest summit in Riyadh. Craig Copetas, we'll have to leave it there, but thanks again for your time.